unquestionably expecting a positive year. My prediction is that before the end of the year, the price of Bitcoin will have reached its all-time high of 70,000. The put position that I was in was quite similar to the cheeky short position. Now, I was thinking, you know what, it is my opinion that the Federal Reserve will not continue to support the bank term funding scheme. There may be problems with the banking system. In March of 2023, when the bank began to fail, there was a slight decline in the value of Bitcoin. It's possible that at this point it will be somewhat comparable. I had projected that it would surpass 40,000. Indeed, it did. In the end, it was only reduced to 38, whatever, did not really proceed with the journey. What else is there to say? In spite of the fact that I was not truly doing what I wanted to do, I evaluated the market. The theta option is the one that is killing me. I'm going to put an end to these things right now. You should also be aware that Bitcoin is currently on its way back up. As a result, I'm pretty much as long as fuck anyway. There is no actual significance to it. When all is said and done, this is nothing more than an attempt to make some additional bucks. The former chief executive officer and co-founder of the cryptocurrency exchange BitMEX, Arthur Hayes, forecasts that Bitcoin will reach a new all-time high of $1 million in the not-too-distant future. On Monday of last week, Arthur posted a price chart for the ailing New York Community Bancorp on his Twitter account, along with the remark, "Resume the dump." The recent comment made by Fed Chair Jerome Powell that the economy and banks in the United States are healthy is unduly optimistic. According to Arthur, when one considers the current status of banks such as the New York Federal Reserve. According to the tweet he sent out, who is more accurate, a market or the central banker? The passage of time and the accumulation of interest are two things that even neo-Keynesians are unable to give up. There is going to be a bailout. As of right now, one Bitcoin is worth $1 million. In a recent interview with Crypto Banter, Arthur concerns the prospect of another broad banking sector crisis in the United States, beginning with the failure of NYCB. He says that this crisis might have a significant impact on the economy. Additionally, he discusses the fact that the bank term funding program will be terminated in March and how this will have a detrimental effect on the entire banking industry. Arthur adds that the scheme was developed at the beginning of the previous year in order to solve the problem of underwater loans. However, banks are now also facing the challenge of dealing with the developing crisis in commercial real estate, which has the potential to trigger an even more severe disaster than the one that occurred the previous year. We will now present you with excerpts from Arthur's interview in which he analyzes the prospect of an imminent crisis and the performance of assets such as Bitcoin and other cryptocurrencies during the crisis. I would appreciate it if you would subscribe to the channel, enable post alerts, and give this video a thumbs up so that I can watch more videos like this one. Thanks, and I hope you enjoy the video. The banking system in the United States is broken and all of the banks are no longer able to pay their debts, as we have witnessed. If you actually, use real accounting and not this fugacious shit that they let them do, then all of them are insolvent. On the other hand, this is not a good thing because the Federal Reserve and the Treasury are playing a game to keep the system afloat. On account of this, they come up with laws in order to provide the impression that these organizations are still financially stable, even though they are not. However, after everything is said and done, they do not wish to print all of this money in order to save themselves. It is their intention to install a backstop that is never put into action. Is that correct? A large stick should be carried around, but it should not be used. That is the objective of the challenge. And, if you are a con artist like Jay Powell, right, you're confidence man, you have the feeling that the central bank has your back, but you don't want to actually have to do anything because you actually print all the money. This is because you are a con artist, as you probably already know. That would not be a smart idea because it would lead to inflation. Moreover, you should know that we have heard that narrative before. You should also know that if inflation continues to rise, it will not be good for Joe Biden's chances of being re-elected to his position as vice president. In other words, they do not wish to print the money, but at the same time, they are attempting to save the financial system. To put it another way, what are we supposed to do? It is imperative that we have a conversation about the security of the financial institutions. And one of those things is, well, you implemented this program known as the Bank Term Funding Program, or BTFP, back in March of the previous year. And now you're appearing on 60 Minutes and telling us that the banking system is robust. Therefore, Jay, if the banks are strong, then why would you have this program? Of course, the banks are powerful. If they are strong, then why would you have this program? There is no longer a requirement for this program. Also, you should know that he appeared on the show 60 Minutes a few weeks ago, and I believe it was the week before last. And he responded by saying it's possible that there are some smaller banks that might be having a problem. However, when all is said and done, you should know that the entire system is in good shape. It's possible, but it's doubtful. As a result, they decide to remove this program, which in essence made it possible for financial institutions to refinance their assets at a rate that was very beneficial and to obtain a price that was significantly favorable for the collateral. It is going to disappear. At this point, however, that is not really the issue at hand, is it? There is a shift in trends. Nobody ever uses the same playbook twice. The playbook is subject to change. On the 20th of March, both the Treasury and mortgage-backed securities were in a state of being underwater. They rectified the situation by implementing a bank term funding program. The topic at hand is commercial real estate this time. Now, even if the bank term funding program were to be extended, the Federal Reserve will not accept a commercial real estate loan as collateral if you already have one. I have no interest in that. Treasury bonds are what they crave. If you want to keep the United States government sustainable, they want you to buy government debt. They do not want you to buy office buildings and lend money to them. As a matter of fact, these banks own that. One of the financial institutions that has experienced a decline of 60% or more over the course of the past week and a half is the New York Community Bank. There are loans available for commercial real estate. It's not like they can go to the Federal Reserve or the discount window and say, here are these bonds on these buildings that I underwrote. The cost of them has decreased. I am unable to sell them, but I must make up for the money that has been taken out of my deposits. Please, Jay, would you be able to give me some new dollars? It is not possible for you to have any dollars at this time, so the answer is no. This is the reason why the bank is being smashed to pieces. Are you implying that this is a different issue and that it is connected to borrowing money for business purposes? Indeed, since they had two significant loans based on multifamily residential buildings and an office building, they boosted their loan loss reserves by a factor of 10 in the file that they submitted for the fourth quarter, according to the information that they disclosed. Additionally, they were forced to cancel their dividend and they incurred a loss in addition to all of these other pretty negative things. And the problem is that, well, I have a building that was marked at 100 and now maybe I get 80 for it, or 670 or 60, or I don't know where the fuck I get with this bill because nobody wants to purchase these things anymore. This is the problem. It is required that you work from home. When it comes to these debts, what should I do to protect myself from the possibility of suffering a loss? I have to set aside some funds. The market is like holy fuck, and the recognition that these assets are not worth what I said they were worth 3 months ago is what the market is like. The New York Community Bank is a relatively modest financial institution. What difference does it make if they declare bankruptcy? Right. On the other hand, if they have these commercial real estate loans, and it's not like they can go to the discount window or get money from the BTFP, then they are pretty much screwed. With that being said, why would I want to own the equity in this bank if they have all these loans and they are unable to go to the government and get financing for them? That is the question that I am trying to answer. Because of the impending crisis, Arthur cautions that it is almost certain that the Federal Reserve will announce another funding program to bail out banks, particularly if a larger bank is threatened. This is especially true if the crisis is imminent. In the course of his conversation with Ranan, the former CEO of BitMEX,